Two of the most common tax deductions small business owners either miss or lose out on are mileage and the home office deduction. This happens not because they're doing anything incorrectly per se, but because they are mistracking them. Today I'm going to show you what to track, why it matters, and how to make this simple without overcomplicating your life. Hello, C Squared Collective, and welcome to our brand new series, Plan, Close, Grow. This series focuses on helping you plan for tax time, to close your books and complete your year-end tasks, and to grow your business or nonprofit with clean, accurate financials. If this is your first time joining us, welcome on in. Each episode is designed to stand out on its own and give you practical, actionable tips on the topic at hand. But if you would like to dive deeper, be sure to check out the rest of the series linked in the description below. As always, if you have questions, drop them in the comments or reach out to us directly at connect@c2accounting.net to schedule one-on-one support. So grab your beverage. Today I have a rose latte, and let's get started. Let's start with mileage. If you drive for your business, to meet clients, pick up supplies, go to the bank, attend meetings, and so on and so forth, the gas and wear and tear on your personal vehicle is considered a business expense. Now, if you have a vehicle and it's purchased and titled in the business name that is only used for business and not at all for personal use, you're already done. In this case, all vehicle expenses such as gas and repairs should already be tracked as business expenses. If you do use the vehicle for personal use at all, then you will need to add this as a taxable benefit on your W-2 for PUCC, which is personal use of company car. But chances are you are using your personal vehicle for both personal and business driving. In this case, we recommend paying for all vehicle expenses, gas, repair, etc., personally, and tracking business mileage to reimburse yourself on a regular basis using the standard mileage rate. The IRS business mileage rate typically changes annually and is meant to cover all vehicle expenses such as gas, insurance, maintenance, wear and tear. And the key takeaway here, if it is your personal vehicle that you also use for work, mileage tracking is our recommended option. If it is a true work vehicle, talk with your tax professional before making any purchases so that it is set up and tracked correctly. Either way, you want to make sure that you have proper records. It's easy to prove a gas or a repair expense with a receipt, but mileage requires records. No mileage log, no deduction, even if the driving was 100% business. What the IRS wants is actually pretty reasonable. For each business trip, you need to be able to show the date, where you went, the business purpose, such as going to the bank or to a meeting, and how many miles you drove. And that's it. Then you use the standard mileage rate for the year, which just multiplies your business miles by a set rate for the year. But in order to be successful, you need to set some really good habits. Log your miles as you go. Don't try to recreate them months later. Trust me, it does not work. A quick note in an app or a spreadsheet or a notebook right after the drive is absolutely more than enough. There are plenty of apps, even one that is included with QuickBooks, that track your trips and allow you to note if it is for personal or business. But we've also included a spreadsheet that you can use. Honestly, my personal favorite is to have a little notebook in my vehicle where I note the date, miles, location, and purpose. Another tip, write down your car's odometer reading or snap a photo at the beginning, so January 1st, and the end of the year, so December 31st. It gives you the total miles that you drove over the full year, and also your accountant needs this as well. One final thing to note that can get a little confusing. If you have a business location where you see clients and you do not have an administrative home office, then the trip from home to work or from work to home is considered your commute and is not considered business miles. However, if you see clients at your business location and do all your administrative work in a home office, then the walk down your hallway is considered your commute, and the drive to your business location is now considered business miles. Next up, let's chat about the home office. This deduction is extremely impactful, but it also has very, very specific rules. In most cases, your home office must be used regularly, so 10 to 12 hours a week, used exclusively for business, and function as your main place of business or where you do your administrative work. This doesn't mean that your house has to look like an office building, but that space cannot double as a guest room or a family TV room. There are two ways to deduct a home office. The simplified method is the easiest. You measure your home office space and multiply it by $5 per square foot, up to 300 square feet maximum. The actual expense method is much more detailed. You deduct a percentage of the real home costs, like rent, utilities, insurance, and maintenance, based off the percentage of your home that you exclusively use for business. If you are using the actual expense method, your home expenses are both personal and business. In this case, we recommend paying for all of the home expenses, mortgage, rent, utilities, etc., personally, and tracking the percentage of business use to reimburse yourself on a regular basis. Here's how to stay organized. Measure your home office and calculate the square footage using length by width of the room. Measure or look up your home's total square footage from the real estate notes from when you bought your home. Take a couple of photos showing that it is a dedicated business space, and track and save your rent or mortgage statements, insurance, property taxes, utility bills, repairs in a spreadsheet digitally or in a single folder labeled Home Office. The beauty of this is that once you do it once, until you move or change your office space, you can simply send your tax accountant the current year's expenses with no further effort on your end. Home offices are reported differently depending on how you report your business income. Schedule C on your personal return has a separate form for the home office. However, owners of corporations must use an accountable plan to reimburse for home office use. The goal of consistently tracking mileage and documenting a home office is to help you properly capture business expenses and deductions. These simple records done regularly protect your deductions and give you peace of mind. Be sure to check out our free mileage and home office tracking resources in the description below. We also have many other free tools available in the education station on our website, so make sure you take a look. We'll be sharing a few more videos of the Plan, Close, Grow series to help you close out last year, hand off taxes smoothly, and learn how to grow in the new year. If you have any questions, drop them in the comments down below. We are very happy to help. And if you would like to see more content like this, be sure to check out our other social channels. I've included those links as well as the link to our website also in the description. Thank you so much for watching, and remember, keep learning so that you can stay rooted in wisdom and grow with care.